the risk of talking about the subject into overkill territory, in their regular reverse repo auction yesterday, the People's Bank of China injected about $22.5 billion of liquidity into the system, the biggest injection in about half a year. The move boosting rumors this morning we could see a cut to capital requirements very soon. Are we going to see a 50 BIP cut to the reserve requirement as early as next week? Now, the official China Securities Journal says the money market squeeze of the past few weeks suggests the banks might have inadequate supply of cash this month without a triple R. Joining us to further ponder this over-pondered theme is Johanna Chua, Chief Economist, Asia Pac at Citi, along with Fred from HSBC. Morning, Johanna.
Hi, good morning.
Okay, we're talking way too much about this, but why don't you add your fuel to the fire on this triple R argument, and how important would it be?
Well, look, I do think it's going to happen. I do think it's going to happen fairly soon. I do think the growth in the economy in China is, it's slowing down. It's stabilizing, but at a pretty low level. So I do think that they need a little bit of more of this in order to ensure that banks will continue to lend at the rate in which they wanted to lend, so that they can achieve at least growth of 7.5%, which is their target for this year. Okay,
perfectly put there. Now, Fred, join the argument, and I want to get a debate going here.
Yeah,
so can you two argue?
One important thing is, I think, is it enough to inject liquidity, and how much do you need to do on the fiscal side to generate demand? So we always thought it's important to also add a bigger fiscal stimulus in addition to that.
Well, no, we definitely expect that. We actually even expect further interest rate cuts. So, for example, for this year, we, over the last month, we downgraded China GDP growth. So we now expect it to grow only about 7.8%. We think 2Q is actually going to be quite weak. Next week, we're going to have CPI number out of China, and we actually think because of the gas price, the benign commodity prices, China's inflation will come off quite sharply. So aside from aside from triple R cut, where we expect at least 2 more times, we do expect another 2 times of interest rate cuts, the asymmetric rate cuts, and we do expect fiscal stimulus. I mean, they've already announced the official budget deficit for this year. After accounting for certain accounting issues, it's actually equivalent to about 2.5% GDP deficit, which is much higher than what it was last year, which is about 1.5%. And that in itself will also kick in. That implies the fiscal stimulus. Not to mention that outside of the budget, there's probably a little bit of the front loading of infrastructure spending as well.
Joanna, Fred, let Marty in. Marty, go on in.
Good morning, Joanna. I want to ask you about timing. You would have figured that with the 4th of July holiday on, that would have been a good time to come in, especially if China wanted to sort of catch speculators out who had a risk-on position. But in the event so far, we're hearing nothing. But also in terms of timing, if you take a look at the last 3 previous cuts in the triple R, haven't they usually been towards the end of the month when officials have had a chance to look at some of the money flow data?
Look, I wish I knew exactly the timing of the triple R cut. Yes, I agree. I mean, normally it usually comes during a weekend. Yes, you would think perhaps it could happen as soon as this week. And next week we are going to have a slew of economic data out of China, which should give an indication of economic activity in June, which should still be fairly, weak. So again, calling for the timing is tough, so we expect it soon. And hopefully, we'll see what happens this weekend or next week. But again, it's quite tough to figure out, to pinpoint exactly when they decide.
One thing perhaps to add to this is that if they cut this weekend, it would suggest that the numbers next week are bad, and the market would be scared, thinking that there's very bad numbers coming out next week as well. So I think it's always that little bit of...
I think they're aware about that, that sort of messaging to the market by now, the way people write up about it.
That would suggest that they hold on then until after the data is out, right? If you do it before, then the market's going to be like, oh my God, they know something we don't know, and then it gets all worried. So maybe that would suggest to do it after, right, after the data comes out.
Well, how bad is it going to get? I mean, are we going to see any of the PMIs like in the low 40s before this is over, Joanna?
Well, I mean, I think at this point we're not expecting very low 40s. I mean, we are expecting, because the stimulus is already going to happen, that by 3Q you'll already start seeing a pickup of economic activity. So hopefully that will allow some sort of potential bounce and stabilization. But I do. Next week we are expecting fixed asset investment will still be quite moderate. But again, the June data is not. I think April was the weaker data. May already was a bit of a pickup from April, and June should be kind of stabilization from sort of the May level. So I don't expect it to continue to slide very dramatically from here. Except maybe exports.
All right, no crash and burn then, says Joanna. Go ahead.